Assalamualaikum, selamat sejahtera. So, video kali ini mengenai end of chapter problems dalam chapter 13 on cash flow estimation ya. Okay, so kita mula dengan problem 13-2 yang ini untuk cash flow estimation saja. Bahagian cash flow estimation saja ya. Okay, so the case is on Eisenhower. Eisenhower Communication is trying to estimate the first year cash flow. Dia sebut kat situ, at year 1 for a proposed project, the financial staff has collected the following information on the project. So ambil masa untuk fahamkan dulu soalan ini. Okay, so dekat situ maklumat yang diberikan ya, termasuk sales revenue, ya, sales revenue, kemudian operating cost, excluding depreciation. Dan di sini memang penting dikeluarkan atau diasingkan depreciation tu sebab depreciation is non-cash charges. So kita akan tambahkan semula non-cash charges ni, ya, kemudian ya, untuk pengiraan free cash flow. And then kita ada the depreciation itself, ya, and then ada interest expense. Tapi make sure yang ini sangat penting, ini satu trap kan, ya, maklumat ini diberikan sebab dia nak make sure, ya, you faham ke tak sama ada financing cost, sama ada dalam bentuk interest ataupun dividen, ya. Haruskah dia dimasukkan dalam capital budgeting? Ya, sepatutnya tidak, okay? Sepatutnya tidak. Right, and then other than that, dia beritahu juga the corporate tax rate is 40% and WACC is 10%. Okay, and then ambil masa, fahamkan, lepas tu boleh teruskan dengan soalan pertama. Ya, soalannya what is the project's cash flow for the first year? Right, for the first year maksudnya selepas company ataupun project tu start operating. Ya, so soalan is asking on CF for year 1. Right. So CF for year 1, ya, maksudnya kalau kita tengok daripada apa ni contoh pengiraan sebelum ni, ya, kita ada sales revenue. Ya, sales revenue. Right. 10 million, ya. Kemudian ada operating cost, so minus operating cost. Okay, so that is 7 million. So say this is in 1,000, ya. Right. And then minus depreciation. Okay, minus depreciation which is 2 million. Okay, so this is what will give you EBIT. Okay, then minus 7, 3 minus 2, so you still have leftover of 1 million. And then daripada 1 million, daripada EBIT 1 million ini, ya, skip interest. Ya, make sure you skip interest. But interest dah masuk dalam WACC. Alright, so EBIT, look at the tax rate. Yeah, the tax rate is 40%. Okay, so 40% of EBIT, which is 1 million, yeah, should give you 400,000, right? 400,000. Okay, so with that, yeah, you dapat net income ataupun earnings lah, ya, earnings after tax kan, earnings after tax, okay, equal to 600,000, right? And then what do? You will add back depreciation, kan? Add back depreciation, how much? It was 2 million. Okay, so that will give you operating cash flow for year 1 equal to 2,600,000. Okay, So this will give you the answer for question A, right? And then next, question B, if the project would cannibalize, ya, cannibal apa? Dia makan lah kan? Makan apa ni? Spesies dia sendiri. Cannibalize other project by 1 million of cash flow before tax, ya. Dia mention kat situ before tax, right? So per year, how would this change your answer to part A, right? So the cannibal effect tu is 1 million and it is before tax. So kita akan pick up kat mana? Ya, before EBIT ni, right? Before EBIT. Okay. So I'll put here B, yeah. Okay, the after tax effect would be to reduce the project's cash flow by 1 million, yeah. 1 million tu you boleh terus ambilkan the after tax. Okay, the after tax cannibal effect. Cannibal, yeah, after tax. Right? So what you do here is just take the 1 million in dalam thousand, right? And then times 1 minus T untuk dapatkan after tax. Okay? So that will give you 1000 times 0.6 or 6000. And then notice ya, sebab yang ini adalah cannibal, right? So kalau dia cannibal, maksudnya dia akan reduce, ya, dia akan reduce you punya cash flow tadi tu, ya, which you already get from A kan, ya. So the net, net ni maksudnya after cannibal effect tadi, cannibalization effect tadi tu, ya, your net OCF would be 2.6 million minus 0.6 million, yeah, which give you 2 million net, right? 2 million. Okay, so itu effect daripada the cannibal tadi tu. Next is C. C is asking you to do what? Yeah, if ignore part B. If the tax rate drop to 30%, how would that change your answer to part A? Okay, so basically, ya, kat sini dia akan dia berikan certain scenario sebab dia ada what if, right? So what you need to do is just look at the equation just now, ya. This thing that kita dah work out before this. Yeah, once you dah sampai EBIT, yeah, sampai sini tak ada, nothing change, right? And then you ada this tax, right? So instead of 40%, you change it to 30%. Kalau 30% maksudnya the tax expense will reduce. Kan, tax expense will reduce to what? From 400 to 300,000. So dekat sini you akan ada 700, right? 700,000. And then you add back the 2 million, therefore you punya OCF ini akan jadi, ya, akan jadi 2.7 million, ya, 2.7 million. Sebab apa? Daripada decreasing tax tadi tu, ya, daripada decreasing tax. Okay. Now kita dah settle dah apa ni? Question 13-12 -2, sorry. 13-2, kita move on to problem yang lebih apa ni? Yang lebih complete, ya. Kita tepikan sikit yang ni. Okay, so for this question, yeah, ini is a new project analysis. Basically, lecture kita memang fokus on new project analysis. Ya, new project. Contohnya you beli aset baru, equipment baru, ya, ataupun boleh juga kalau kita kata macam buat renovation, ya, renovation, modification dan sebagainya, something yang sebelum ni belum ada, right? Itu new project. Okay, dalam problem ni, ya, kita tengok soalannya dulu. You must evaluate the purchase of a proposed spectrometer for the R&D department. So dekat sini, the project is purchasing, ya, project is to purchase new equipment, right? The spectrometer tadi tu, purchase new equipment. Alright, so the base price maksudnya, ya, harga equipment tu saja is 140 and it would cost another 30,000, ya, to modify. Okay, dekat sini, ya, kita ada sebahagian cost untuk modify equipment tu. Ya, and this happen a lot, ya, dalam factory, ya, sebab kadang-kadang bila equipment yang dibeli itu datang dalam keadaan yang belum fit dengan keperluan factory dan kena ada modification. Okay. The equipment fall into MAC-RS 3-year class. Ya, ini macam contoh soalan chapter 12 sebelum ni. Ya, ini depreciation method. Bila dia fall in 3-year class, biasanya dia akan ada 4 rates. Okay, and then would be sold after 3 years, yeah, for 60,000. This 60,000 is the expected salvage value. Ya, maksudnya bila company dah gunakan equipment ni selama 3 tahun, ya, bila projek tu dah habis, so what they do, they will sell the equipment. Alright. The applicable depreciation rates are 33%, yeah, 45%, 15%, and 7%. So basically, bila you diberikan MAC-RS sebagai depreciation method, yeah, the rates will be given. So tak perlu nak hafal, jangan risau macam tu. Yeah. The equipment would require an 8,000 increase in net working capital. Ya, dalam bentuk apa? Spare parts, inventory, ya. Right? So saya tak nak ulang lah apa networking capital ni kan. The project would have no effect on revenue, yeah, but it should save the firm 50,000 per year before tax labor cost. So company ni dah go automated lah, ya. Dia go for automation, so lebih banyak gunakan machineries instead of labor cost, ya. Okay, by the way, it is very important for us to note that, yeah, in capital budgeting or in finance, yeah, revenue and saving are treated equally. Yeah. Any saving maksudnya you tak perlu keluarkan bayaran tersebut kan. You tak perlu buat bayaran. So bila you menjimatkan sesuatu, you treat penjimatan tu saving, yeah, just like your revenue. Okay. Tak ada perbezaan. Right? Sama ada you dapat daripada you punya jualan ataupun you save dari jimat, ya, daripada sebarang tindakan syarikat, ya, itu dianggap macam revenue juga. The firm marginal tax rate is 40%. Okay, fine. Now, ya, dengan mengandaikan you dah faham soalan ni, then we look at question A. Yeah, what is the initial investment outlay for the spectrometer? That is, what is year 0 cash flow? Ya, bila projek tu nak start, apa yang perlu dibelanjakan oleh syarikat? Okay, now, yeah, let's do this. Ya, bila dia cakap pasal initial outlay, ya, boleh refer balik pada lecture video hari tu. Okay, so apa yang penting kat situ? First, you tengok apa yang company spend untuk mulakan projek. Yeah. For example, right, the spectrometer. Yeah, the spectrometer. company kena beli dan harga spektrometer ini adalah 140,000. Right? Harganya yang you kena beli, so it comes in a negative. Right? And then dia ada modification cost. Ya, modification, tak ada shipping dan installation, probably dah masuk sekali dengan harga yang lain tu kan. Harga base price tadi tu. Okay, so for modification, dia ada an additional cost of 30,000. Okay, and then what? Ada net operating working capital. Yeah. Net operating working capital, which is how much? Yeah, 8,000. Right? So ada lagi tak? Yeah, nampaknya tak ada. So this is it. Yeah. So the initial investment outlay, yeah, okay, which is cash flow at year 0, yeah, so negative 178, yeah, thousand. Okay, moving on, yeah, to question B. Yeah, for question B, what are the projects? Yeah, what are the projects annual cash flow, right? In year 1, 2, and 3. Okay, so that one is part B. Part B is asking you to calculate the operating cash flow, yeah, from T equal to 1 until 3. Okay, so let's do this. Ya, kita set upkan dia punya apa ni, entries dia. Let's put this as year 1, 2, and 3. Hopefully muat ya. Okay, so what do we include this here? Ya, kita tak ada revenue, but we have yang labor saving tadi kan, labor cost saving tadi tu. Saving on labor cost. Okay, so saving on labor cost, right, is how much? 50,000 per year before tax. Okay, so we'll just put 50 here, 50,000, 50,000, right? Okay, next is operating cost. Tak adalah, because kita ada dah masukkan saving ni tadi kan. Ya, memang tak ada sebut any additional cost di situ untuk the company operate this equipment. Okay, but don't forget about depreciation. Ya, depreciation. Okay, so kita belum buat pengiraan untuk depreciation. Yeah, so why don't we do it here? Right? Why don't we do it here? Okay, now remember ya, untuk calculate depreciation, yeah, what we need to do first is to determine what is the depreciable value. So in this case, ini dia, yeah, 170,000. Again, yeah, why do we include the modification cost? Because yeah, bila kita calculate depreciation depreciable value tu, yeah, it would include all costs until the asset is operatable. Yeah, sampai dia operating, right? So in this case, the depreciable value, depreciable basis, yeah, is 170,000. Okay, so let's take that value to calculate the depreciation. Okay, that's my pen. Okay, right now, yeah, this is the year 1, 2, 3, and this is the rate. Yeah, so excuse my writing here. The rate would be 33%, 45%, and then 15% for the third year, and we'll have another rate, yeah, which actually will determine your book value. Sebab kita punya project ni is only for 3 years kan. So dekat sini nanti you akan ada some book value. Okay, now let's calculate the depreciation. Actually you will have to multiply all this rate with 170,000. Okay, multiply that, right? Okay, let me refer to the calculation before. Okay, so the depreciation for year 1 would be 56,100, and then followed by 76,500, and then you have 25,500, 25,500, and then the last one 7%. Yeah, that 7% would be 11,900. Yeah, 11,900. And again, because our project stopped at year 3, this remaining or the last depreciation represent the book value for this asset, for this equipment. Okay, now we have this value. Let's transfer to our entries ni. Okay, so we'll have 56,100 here. For saving is only 50,000, right? Second year we'll have 76,500. Third year we have 25,500. So what do you think? What happened to the company's EBIT? Yeah, surely, you can see that the first year we record a negative EBIT, kan? Yeah, a negative EBIT. Okay, so let's do this. We have negative 100 here. Yeah, negative 26,500. Okay, and here we'll have the first positive, which is 24,500. Okay, and this is the EBIT. And next, we are going to deduct the tax, which in this case is based on 40% rate, right? 40% rate. Okay, so the tax here would be on a negative 100, right? So you have negative 40 here. Yeah. Let me calculate that. Okay. So we'll have negative 10,600 here. And times 24,500. 9,800. Okay. All right. So let's do this. Sorry, this is a positive here. Let's solve this. Here you will have negative 100 plus 40 here, because this is negative, and you have a minus here. So 100 negative plus 40. So you will have a remaining 60. Yeah. Okay, next. Oh, I'm sorry. This one should be, sorry, there's a mistake here. Okay, let me recalculate then. 0.4 times 6100. Okay, so this one should be negative 2440. Okay, so let me do this. Okay, so down here you have negative 3660. Okay, and then we have negative 26,500 plus 10,000, yeah, plus 10,600. Okay, so we'll have, right, 5 and 1, negative 15,900. So this is what happened bila kita ada credit, tax credit, yeah. Okay, and then finally we have this 24,500 minus tax 9,800. Okay, so we'll have 7 here and then 23, oops, 13,700. Okay, so this is the earning after tax, and then you are going to add back the depreciation, right? Add back the depreciation, exactly the amount that we have above, right? So 56,100, 76,500, and 25,500. Okay, and we solve this to get the operating cash flow. Yeah, the operating cash flow. Okay, so I'll just give you the final question. The final answer will have 52,440 on the first year, 60,600 on the second year, and 88,960. Where do we get the 60 here? You can check that later, yeah. Okay, please check that later. All right, so, oh my God, is there something wrong here? Let me recalculate, please. Let me just recalculate. Negative 3660 plus 364, 56. Okay, so there's a minor mistake here. Yeah, it should be 7 here. Okay, so let me just rewrite, right? You will have 52,740, and then for the second cash flow, you'll have negative 15,900, and then plus 76,500. Okay, so this is correct here. And then the last one, 3,700 plus 25,500. Okay, so down here, we should get 15,739, 39, 200. Okay, now move on to the next one. C, if the WACC is 12%, should the spectrometer be purchased? Explain. Okay, now, okay, the annual cash flow. By the way, when, okay, for operating cash flow, yeah, for year 1 and year 2, we complete our calculation. But for year 3, you have to include this with another item, which is the terminal cash flow, right? The terminal cash flow. So what do we have for terminal cash flow? What are the items in terminal cash flow? This is it, right? First, make sure you recover the operating, the net operating working capital, right? Which in this case is how much? This 8,000. Okay, you will recover completely. So you have 8,000. Next, you will have your net salvage value, and this is how you calculate the salvage value, right? You are expecting to sell the equipment at would be sold after 3 years for 60,000. So that's your net salvage value. Okay, so the salvage value is 60,000. This is not the net. So next we have to deduct this value with the book value of the equipment, right? The book value of the equipment would be, okay, where is it? Okay, here, right? 11,900. So here the company is making a gain, right, from selling the old equipment, right? So gain on sale of asset, right? Here you will get 60,000. I'll use my Excel to be faster. Okay, 48,000. 48,100. And this is the amount that you are going to pay tax on, right? So minus with the tax on gain, right? So the tax is still 40%. So what is 40% of that value? What is 40% of that gain? Okay, so the amount is 19,240. Okay, so now once you have already calculated the tax on the gain, so you are going to take the salvage value minus the tax, right? 60,000 plus the tax. So from there, you get your net salvage value equal to 40,716. All right, and you are going to add this net salvage value and the recovered net working capital. Okay, and on top of that, you are going to also add this terminal cash flow with the operating cash flow. So basically, right, your cash flow, your free cash flows would be 52,740 for the first year, 60 for the second year, and 960 for the third year. So if we are going to put this and calculate the net present value, because that is how you're going to answer part C, right? By calculating the net present value. How do you know that? It's by default. Yeah. If the question is asking you to make decision about the project, then by default, you have to calculate the net present value. Okay, so we're going to, just put or summarize the whole thing. Okay, for the first year, you have, sorry, for the year 0. So you have -1, negative, -1, 7, 8, 1, 7, 8, right? And then you have this in year 1, you have 52. In year 2, you have 60, 600. And in year 3, you have 87, 960. So what do you do next? So we are going to, like just take this away. So in your financial calculator, you are going to put this value as your CF0, CF1, CF2, and CF3. So let's see what we're going to get, from that. Let me take my financial calculator. So I'm using financial calculator in my from my handphone. Okay, I'm going to input 12%, right, for the WACC, and then cash flow 1 is negative 178, and then cash flow 2 52 700, cash flow 3 60 600, and cash flow 3, it was cash flow 2 just now, cash flow 3 is 87 960, right? So I'll just push calculate, and there you go. I got the NPV. equal to 5,000. Sorry. It's a negative NPV, yeah. Negative 20 equal to 8.29, right? And then the IRR is 5.8616. So this is way below our WACC, which is 12%, and this is less than 0. So both show that the project is not acceptable. Okay, because it will cause the company to incur a loss. Okay, so that's it for today. InsyaAllah yang lain tu saya akan bagi jawapannya untuk you try sendiri. Ya, so insyaAllah hingga ke masa lain. Okay, Assalamualaikum dan selamat malam.